We haven't talked about silver, but when we were at the show, I mean, obviously gold's been kind of holding strong and the miners are finally getting that bid, but silver's quietly become the best performing commodity on the board. I mean, prices have rallied over 28% year to date. Firms like Sprout are, who you used to be with over there, Rick, are pointing to 7 year structural deficits combined with record demand, as you know. I think the mid-year outlook even raised the possibility of a silver squeeze, not just from industrial users, but from investment flows. Their analyst Maria Shmermova said that silver is undervalued relative to gold and is far more sensitive to incremental buying. Rick, I mean, is silver finally stepping out of gold's shadow, and is it investable on its own merit right now?
Yes and yes.
Yeah.
In my experience, Jeremy, precious metals bull markets are led by gold. They're led by
Mhm.
the fear buyer. They get kicked off because savers and investors are concerned about the deterioration of the purchasing power of domestic currencies, fiat currencies, in regular savings products. Gold moves first. When the move in gold allows producer margins to expand, the senior stocks move next, which is what we've just seen.
Mhm.
At some point in time, the momentum in both gold and gold stocks attracts the generalist investor into the precious metal space. When that happens, perhaps because of its lower unit cost, leadership goes from gold to silver. I've watched this happen 3 times before in my life, and Jeremy, believe me, you will not need Rick Rule to tell you when it occurs.
Mhm.
Silver is incredibly volatile, both to the upside and the downside. It's the upside that comes next. Uh, as to a squeeze, I think the squeeze comes about, if it comes about, because the trading volume in the futures market is so extraordinary relative to the amount of gold available for good delivery in the physicals market. Many days, single days, the trading market trades 200 times the amount of silver
Mhm.
available for good delivery on the market. The potential for a fairly small number of the futures contracts to hold for delivery and the impact of what that would have on physically available supply could be dramatic.
Yeah. I mean, we've been hearing about that squeeze for a while. It's almost like this little fake out. Everyone goes, when I put a headline, they go, well, you didn't make it. No, we didn't have the
Uh,
squeeze. I wonder if we're
Jer-
we're getting closer.
well, Jeremy, I think what we need to differentiate between the squeeze that we'll likely see and the squeeze we won't see.
Yeah.
There are some silver bugs who suggest that there will be no silver available, and
Mhm.
as a consequence of that, there will be the mother of all short squeezes on the futures market. That won't happen. Uh, Silver futures markets are owned and made by the dealers, by the banks.
Yeah.
What will happen in the event that there is a temporary unavailable of metal is that the markets will suspend the contracts and cash settle. That's what will happen.
Hmm.
This will be extremely pleasant for the people who are long and extremely unpleasant for the people who are short. Who are short. But it won't be the sort of incurable market imbalance that many of the silver bulls dare dream for.
Yeah. I mean, if we're headed to a real silver supply crunch, I mean, who actually positioned to benefit? Is it the producers? Is it royalties? Is it physical holders?
Yes, yes, and yes.
Yeah.
The physical holder probably in percentage wise benefits
Mhm.
the least. The leveraged futures holder maybe more. The silver producer a lot. But the answer to that is yes, yes, and yes. And of course, the penalty is borne by those who didn't participate or heaven help them,
Yeah.
those who were.
On the minor front, I mean, we talked a little bit about M&A, but it feels like gold, as you mentioned, got a little bit ahead on the M&A side. Silver's catching up. I know there's a lot of people kind of going shopping over at your conference. What companies are best positioned to get in or to be taken out or to go shopping on the other side?
There is a real shortage
Yeah.
of decent quality silver companies, and that's been noted in three prior bull markets. My friend Doug Casey described the circumstance where the generalist investor money comes in the silver equity space as trying to siphon Hoover Dam through a garden hose. There just aren't enough. Uh, and the big silver names are becoming less silver centric. The go to name in the last bull market was, of course, Ross Beatty's entry, Silver Standard, where over 50% of revenues are now gold revenues.
Mhm.
There is still a silver constituency. For those people who would like equity vehicles that are very responsive to the silver price. Traditionally, those include core mining, Hecla, and First Majestic Silver. For people who want really high quality silver names that are maybe less correlated to the silver market, one likely needs to look south of the border. One looks to Fresnillo, uh, one looks to Peñoles,
Hmm.
one looks to Buenaventura. Among the juniors, we had a great list at the conference. We had Aya Gold and Silver, a great small producer. We had Visla Silver. We had Abra Silver. Very, very, very small, but list of very high quality discoveries.
Hmm. Yeah, we also saw when we were in the middle of the conference, I mean, Trump was making more announcements about these strategic minerals, and uranium was very much in the headlines. It's back around 71.50 a pound right now, down from its highs, but still structurally tight. And then with Sprott, SMRs, and national security in play, the long case is still intact. Where are we in the uranium cycle? Is this a pause or kind of a coiled spring?
Yes and yes.
Yeah.
People's time frame with regards to a coiled spring is painfully short for them.
Hmm.
We could easily be in a 12 to 24-month pause. I think people need to understand that there's a lot of nervousness about a recession. And you can have production tightness in electricity if you have demand weakness in electricity without moving the price. And I think we're seeing this. Longer term, I think that uranium is a total coiled spring. What's important about the uranium equities, and we've talked about this on Kitco before,
Hmm.
is increasing prevalence of a term market in uranium rather than a spot market of uranium, so that producers can lock in volume and price for as much as 30 years in the future, which should, over the next 5 years, lower the cost of capital, both debt capital and equity capital. And I don't think one person in 1,000 who is a uranium speculator understands the importance of the term market in uranium. And while we're on the topic of uranium, the quarter that was just released by Cameco rivals the Newmont quarter. It was a
Yeah.
truly spectacular quarter. A quarter that had a lot of things to look at. Great free cash flow, despite the fact that Cameco's average selling price for the quarter was $57 in the spot market where the price exceeded 70.
Hmm.
Well, that means when the short-term contracts roll over in favor of longer-term contracts, there's as much as 20 or $25 in gross selling price. No one knows how much margin. But the second thing it shows is that, at least so far, Cameco has managed the Westinghouse acquisition well, because the contribution of the Westinghouse assets into the Cameco income statement were spectacular. My nervousness about Cameco was always, could they, as miners, manage an engineering, processing, and construction firm? The last three quarters would suggest that the answer to that is a resounding yes.
Cameco, interesting. I mean, you've always kind of said that in the past the great bull markets start when nobody can produce profitability. If that isn't momentum in uranium, then what is?
Well, that's a really good question. I mean, the incredible increase in free cash flow generation at Cameco
Yeah.
tells you probably everything that you need to know about a proxy for the market relative to the price of uranium.